Good morning. I want to talk. I haven't been here for a while, so let me give you a summary of where we stand. Let's look at big picture analysis. Let's look at the daily chart. You will see here that this is the Standard & Poor's 500. This was the high of the market, and those who watched me last month, I gave a sell signal 10 days before it actually took place due to the lack of momentum and the upper band of the Bollinger Band. At any rate, this is where we hit this a couple of days ago, and this was the first retracement, first Fibonacci retracement at the 37.8, which we hit it yesterday. And as a result, I made the decision to get out. Now, I'm not saying we're coming down to the bottom. In fact, we are still an uptrend, but that we will have to see whether we are in a position to resume an uptrend or we're going to sit there for a while. The key to that is this momentum oscillator that I've talked about before. That has to go down to zero, and it's way back from, it's not even close to zero before we have a wave 5 to the downside. So far, we're far, okay? Also, if you look at the stochastic is overbought right here, and that's why I supported the move to the downside today, and I was short 2 contracts overnight, and I covered them earlier today. So we will see what will happen. For shorter term projections, we're going to look at the 60 minutes or even the 30 minutes. The 60 minutes says wave 5 has been completed. As you can see right there, it hit the top perfectly. So at least for the Standard & Poor's, the first projection is going all the way down to 2400, which is a support line. The Nasdaq is a little bit clearer, or stronger I should say. It doesn't argue for a wave 5. Actually it did, it was arguing for a wave 4 yesterday. Now it looks like a wave 5. We are hitting the lower band of the Bollinger Band, which tells me that we may get some support early in the morning. The Nasdaq is down 200 points. That's quite significant, and the Dow Jones is down 700 points. And that I expected at any rate. I did say that yesterday. So let's look at the 30 minutes, which may give us some more insights, but that's the shorter time frame that I want to look at. The 30 minutes is what I was referring to, and we are hitting the first support line. So it's possible that we will have a slight rebound in the morning. But going by the rules, let's see, the momentum is down to zero. Stochastic allows for move to the upside. Stochastic RSI is oversold on the very short term. So I would not be surprised if we bounce up early in the morning. But I think we are still within the channel. I don't see a big move. We will see. Is the wave 5 coming here? Well, you see that indicator right here is not crossing the zero line, so I'm not sure yet. So in order for me to go long in the morning, I want this to cross the zero line. It's close to, but not enough. And accordingly, we will stay put. And therefore, we will look for the shorter term frames to give us a clearer indicator of where we're going. So let's go for the 3 minutes, which we use for trading. And the 3 minutes has support at some point here, but the 3 minutes does allow for move further down. Let's look at the 5 minutes. So we're not out of the woods yet, to be honest. For that morning, we're still definitely not going up long term, but for trading purposes, there's still more to come. And so I'm thinking that the 30 minutes will eventually get violated. The only thing that's holding me back from shorting at this point is simply the fact that the 60 minutes and 30 minutes are at the bottom Bollinger Band, which will provide some support. So I'd like to see a little bit retracement of that decline, and then we will consider shorting if that 30 minutes does not give us a buy signal through the Elliott analysis. Let me show you that one more time. This is the first support, so it's coming right there at first support on the Nasdaq. Does the S&P provide the same thing? Let's see. Yeah, the S&P gave a sell signal earlier this morning with the red line. So I have a feeling we will stay where we are for a second, and then as the Bollinger Band, the lower band will expand, because remember it's a moving average Bollinger Band, it will expand. We are likely to come further down based on the S&P. If we fall below the 2500, which is 24 points from here, we're probably gonna go down to the 2400. Let's see if that's the case for the Nasdaq again. Nasdaq is looking a little bit better. You see there was no red line, so there's no clear sell signal yet. And it bounced off the lower Bollinger Band. I'll make it bigger so you could see it. See, here's the Bollinger Band. It bounced, it went outside it and came in and bounced back, and now I believe it's at the bar or somewhere. Let's see, it's at 76.20, 52, so it's somewhere here. Notice that that did not penetrate the Bollinger Band on the upside, which tells me this was not even the moving average, and therefore I'm gonna argue that we probably need to stay short, and I will be shorting once the market opens, possibly. I'll look for the 3 minutes to give me the signal. Let me share with you my trading chart. Again, you'll see here, these are the big guys. They're all selling on the S&P. So I'm not likely to be buying at this point. I'll stay still for the first 5-10 minutes because the market is extremely volatile in the early minutes. And we'll take it from there. I have changed it from 5 minutes to 500 tick or 1000 tick, so I capture the tick motion, which is really a measure of emotion, and I also have the 3 minutes, which is a function of time. At this point, I think we need to wait to see what the market will do. Let's see if there are any news. We'll turn on the TV for a second. On the 3 minutes we have a positive, but that doesn't mean a whole lot. So we will just have to wait and see. The market will open in 30 seconds. I will make a decision, but I'm inclined to go short, not go long at this point. With 700 on the Dow, that's significant. The 30 minutes can go either way at this point, although it seems to be oversold. So we'll wait and see what happens. The market has opened. The tick is negative 1600. That is, I don't think I've ever seen it so low. That's just very low, way extreme. I'm itching to buy because it's just so high. I missed it. I wanted to buy. I missed it 20 points. Okay. The market is trying to get to move up. Every time it moves up, it sells back. We have 200 stocks up and 2600 down. That's 13-to-1 ratio. That's pretty bad. The trend though is not bearish. Neither Nasdaq or the S&P, NYSE I should say. The Nasdaq has 500 up and 2500 down. That's 5-to-1. So Nasdaq is stronger. I'm surprised there's not much volatility this morning as I expected. It's a 20 points range. That's not that much for this market. I put an order to buy a little bit below the market. I may have missed it. We'll find out. I think the market wants to go up. Yep. Yeah, it did.
Order filled.
Okay, I got in one contract at 81. You know, I need 5 points. I got them, so I'm gonna get out. I have a buy at the lower price of 67. Not gonna go there anytime soon, so I'll cancel that. There is no clear indication where the market is going at this point. It's nowhere land. It's down big, but right now there is no clear indication. There is some movement to the upside, a minor one, not enough to trade. I'm gonna be trading 2 contracts at a time now because it's a little bit more stable than normal, at least in the past 10 days or so. For markets down 200 points on the Nasdaq, a range of 20 is very, very small. You could buy at the 60s, at the 66, 67 and sell at the 95. That has been the range, which is very, very small, narrow for this time of the day. I'm not sure what that says at this point. Nobody's, maybe people are afraid to take a stand one way or the other. Okay, we almost back to the low of the day.
Just to preserve the supply, so to speak, Jim.
But that means they're going to sign-ups rule. If you don't have new coffee, if you don't have like water cooler
well, of course, there's no water pollution.
Let's see what happens here. Does it bounce back or does it break?
You are going to have signups diminish, but we did see.
Remember, I need the parabolic on the 3 minutes to go negative before I go short. I know on the 1000 ticket did for the S&P. This didn't happen for the Nasdaq, so they're not in agreement, although Nasdaq is losing steam quickly.
Before she goes to bed, she checks the Facebook feed. Oh, God. Zuckerberg.
I will short when I see a change, at least in the 10 minutes, in the 2 minutes, I should say. But I'm not going to jump before. 2 minutes gave me a signal. Let's wait for confirmation of the 3 minutes and the 1000 tick.
Pretty good coming with the NFL. Look at that stock. That hangs up there like a champ. So there are some areas we should really do the ultimate stay-at-home portfolio.
In fact, the 5 minutes gave me a buy signal. Pretty confusing market at this point. Can go either way.
Yep. Well, that's a good one, and one that a lot of people have been exploring. I know Peloton is another one, right? That's been benefiting.
The 1000 gave me a sell signal. The 1000 tick, that is. Now I just want to wait for the sell signal from the time. The ticks confirmed it. The time has not confirmed it yet. It's coming down quickly though.
That's really good. Upgrade to buy healthcare, fabric, and home care. Sure, that's right. I mean, we're washing everything. How many times do you go over? I mean, what do? I'm constantly wiping things. I mean, I don't know. It's only me at home, and I'm wiping. I'm gonna give it to myself. Doesn't matter. You still keep wiping. You have to keep wiping because it's in the Constitution, the new Constitution.
You got to keep wiping. You're going to have to figure out a way to also figure out a way to cut your own hair. So that's going to be interesting too.
Well,
there isn't much of
the
it
edge
cut,
on your
still.
corner.
Yeah.
But there was a downgrade at J.P. Morgan, and we forget that. We wish Jamie the best of luck, but David, we're worried about the fortress balance sheet there. Because
Are we really worried though, Jim?
No, the
Are you
piece
being serious when you say
no,
that?
the piece is about non-performers. Now, I'm not worried. JP Morgan should come through 5, but non-performers are really at front and center. When we keep hearing forbearance, what that usually means is the bank isn't getting paid. And this isn't community chest.
The Nasdaq is at the low of the day, or the night I should say. S&P is holding a little bit more.
Not yet.
Okay, we have a sell signal on the Nasdaq.
We'll go on and on and
We
on.
could go short here.
Order fill.
We're a unit.
And we'll double down on a higher level.
The Blasio method, right? Have fewer trades and pack them. He's got a King Oscar.
Here it is.
King Oscar plan.
Yeah.
We will short it again here.
Order
It didn't give me a chance to even short at a higher level.
Bob Bassani, get a little more focus on the broader market here and what we're seeing. Good morning, Bob.
Good morning, David. Good to see you. As always, good to see you, Jim.
Okay, it's breaking down.
For the Green Shoots crowd. Last night, with the close we had, the Green Shoots crowd
And at win 95, we shorted at 04.
out of a bear market at
But you see it's getting volatile again. Now you can see the volatility
We've had reports of corporate insider buying. The Green Shoots
from
crowd
04.
screaming, the bottom is in. And
Boy, that's not going to give me much chance to make even my 5 points.
is the intraday volatility.
Okay, I took my 8 points on 2 contracts of the Nasdaq.
So look again today at the sectors and what's going on. It's gone back to where it was.
About $40 or $35. And we revisit it now. We'll see where we are.
Bank stocks, technology stocks somewhat, and consumer staples are down less. This is a pattern we saw many times.
Now we have clear red lines. And we have a bit more to go. Let's wait for the Nasdaq to recover a little bit. And we will short it again. Let it go inside the Bollinger Band for a little while. Just a minute or so.
They withdrew their guidance as well. Macerate, one of the big REITs as well. So the list grows.
Okay.
It's going to get bigger as we get to earnings season. Companies are going to simply withdraw their guidance, or in some cases, as the SEC has allowed them, they may not even.
It went up. Now it's went to 09.
Grace period if they fit certain criteria. I want to
The S&P now is at the low of the day, down 3.5%. The Nasdaq is equally bad.
overnight. This was before the open. That
And the Dow Jones probably down close to 1,000, seems like it probably at this point. That is the futures. Yep, 900. Okay. شفت الشاي صح؟ صح. Okay, some stability. The 30 minutes when the Nasdaq is really at the support, the blue line, and for the S&P, the only reason I don't like it to go long, because we have all these red lines which are a sell signal. So I'm hesitant to go long at this point. In fact, I think I need to stay short. Let's go back to the 30 seconds. The 1000 tick. Wow, it's 84. It went further down. Okay. So we'll see. I'm just amazed by the lack of volatility, relatively speaking, I guess. So let's see how it's gonna go up here.
It's one of the first I've seen Howard use. Court, did you see this, Jim? They're going to go for a primary offering of stock, try and raise money. They also say Bill Ackman potentially going to step up. We'll see, for $500 million in a private placement at the same price that they were able to sell whatever number of shares. They didn't actually, I didn't see it in the release what their plan is, but That getting crushed today,
Well,
of course, is Howard Hughes.
good to
along
raise
with
money when you can
so
raise
many
it.
of these similar names.
But look at a thing like
Yeah.
Tanger Factory
I know.
Outlet, David. This is Steve Tanger. He's one of the most seasoned players. The outlets are fun. I find when you're at the beach house,
Okay,
you go to the
I'm
outlet.
gonna-
put a
I'm
table,
gonna short one
kitchen
contract
table, at a Tanger
and
this
double
year.
down
David, it's got a 23%
on the
yield.
Nasdaq.
That itself seems
I
like a
shorted
red
at
flag.
02.
And it sells at $6.
Now
I mean, you see
it's
these things, and aren't you just kind of astonished
We'll
where
see
some
what
of these
happens.
stocks are? I mean, look, Simon Properties, you know David Simon. Is there anyone who's better at running a mall than David Simon? And, well, I mean, it's 14%
the
yield.
big boys are
But then
buying,
again,
to
the
be
malls are
honest.
just- the malls, not a lot of traffic.
So
in the
I'm gonna
mall.
cover at break-even
You know?
point.
There are
You know,
not a lot
David,
of traffic in malls that are
And by the way,
closed.
Macy's is a non-essential property. You know how they have these essential properties, non-essential. Look at Macy's. You know, they got people say, "Oh boy, that dividend, the yield's getting bigger and bigger and bigger." You know, it
I
gets
covered
bigger
that
and bigger until it
probably
goes
at $10
away.
loss.
Macy's is $5.
I think there's a lot of buying on the
They
big
have to throw them
boys.
some business.
So let's see what's gonna happen.
It is.
I went
I'm just
long, and
looking
let's
at-
take it
as
from
you mentioned
there.
These names, Jim, I look at them and it is shocking.
Isn't it?
And those dividend yields. Listen, obviously, I mean, we know in an environment like this, you've got to raise capital any way you potentially
Yes.
can and cut your costs and your expenditures.
Yeah,
So
Schlumberger.
obviously, these dividends, one would expect.
Look, Schlumberger pays $2.8 billion in dividends, right? Now, Schlumberger is the finest company in the industry. Everybody knows that. I tried to get a job at Schlumberger in 1983, and basically I was told it's too stupid. I don't ever mind that. I went to college to get stupid. But I gotta say, when I look at Schlumberger, the 14% yield down 10%
I doubled
today,
down,
these are breathtaking.
and now average cost is 19, so I'm looking okay.
Incredible.
Yeah. Jim, let's get to Rick Santelli now. Get a check on the bond markets and fixed income overall. Good morning, Rick.
Morning, David. You know, early this morning we did have some data out. And, you know, many thought personal income and spending is something not to pay attention to. I'm sorry, I think you
But
have
it's
to
not
pay
going as
attention to
up
it.
as
6
fast
cents
as I
was
like
the
it
upfront
to.
income side. Actually, the
I'll give it
highest
some
level,
time.
You'd have to go back to December of 2018 to
Now
find
we
a
see
higher
volatility.
month-to-month increase in income. Also, if you looked at some of the internals with regard to the core personal consumption expenditure, that happened to tick up price-wise up to 1.8. That is the highest pricing of that particular core PCE in favor of the Fed since December of 2018. I think we need to be aware of that. Also, Bank of Canada, for the third time in March, cut rates again, this time 50 basis points. All three cumulatively are 150 basis points, which brings their rate to 0.25. If you look at
I
the
sold
Fed,
at 27.
the repos, 6.75 billion.
Now it's at
60
30.
are coming down. No takers on their long-term
So we made $28 on that
That's
one.
a good thing. Now let's look at a 2-year chart going back.
Remember, this is just a micro.
Because at 27 basis points, that's the last time we closed at this area. We're now down 3 on the day, down 4 on the
You can
week.
still sell your position. It's all.
Hovering at
It went to
73
30,
basis
27,
points.
28.
It's interesting. They closed at 85 yesterday.
It's getting
They
volatile
closed at
again.
85 on Friday. So they're right
Which is
around
good for
a
us
dozen
because
basis points both on the
we'll
day
make money on
and on the
volatility.
week. And if you look at a month to date of 10s, well, you could see the lowest close ever at 54 basis points. So we only have a 19 basis point cushion as we sit here. Truly, it's very
By the way, I do want to show you something last night because I had a short position going into the night. It paid off well. This is what we did last night. I went in and out 1,000 times, it feels like it.
Finally, let's look at the wildest foreign exchange market. A 1 week of the dollar index starting last
That's what I did last, 2 hours in the evening. That's what it is. We have 408, and that's how the chart looked. Up small. I always took my profit every time I had $20-$30, and that's where we stand right now. And this is, I lost some money on that trade where the market was not going to go down. I reversed quickly, went long, I made the money right here. So that's where we stand. And so far we made $408. A couple of hours trade last night and this morning. So we're doing okay on that one.
The Bond Report is sponsored by
Seems to have come down a little bit.
kids worry about a lot of things.
Came down further. Wasn't long-lived, that's what. It was not really a serious move to the upside. 20 points is nothing when you're down 200 points. And I didn't expect it because the parabolic is still negative, as you can see from here, on both the 1000 tick and the 3 minutes, so that's not going anywhere. Right here, the S&P seems to have a 3-wave to the upside, and let's see if we could. It did not go down to zero enough to buy. The Elliott trigger is not positive, so we'll just wait to see where that's gonna lead us. Remember, the PTI is above 35 is critical.
The stand is a symbol of economic advancement, social progress, and limitless opportunity. That's the tomorrow that we envision. And to get there, we'll have to rewrite it today.
Yes, it's the first word of any new discovery.
The tick is improving, it's almost neutral, which is a good sign.
Yes, with the fastest non-drowsy allergy relief. And turning a half-hearted yes into an all-in yes. Allegra, live your life, not your allergies.
I know that every single time that I sit up, there is a chance that that's the last time.
I am willing to go long, but this parabolic need to support it. Without it, I am not gonna do this because the 30 minutes is not telling me to go long.
Consider protected lifetime income from an annuity as part
So if the 30 minutes doesn't do it and the short term does not support it, I'm not gonna do it. Unless, I mean, if you are gambler, fine, but we're not gambling, we're trading.
At Emerson, when issues become inspiration, creating a better world isn't just a result, it's a responsibility. Emerson, consider it solved.
I know kids worry about a lot of things. Getting enough food to eat shouldn't be one of them. Through a nationwide network,
No action is needed at this time. Confused market is where it is. The Nasdaq is down, the future is down 230. That's almost 3%, and the S&P is even worse, 3.2%.
That is the winner.
Shark Tank.
Always be closing.
Shark Tank. Sunday starting at 3 Eastern, CNBC.
Some life in the Nasdaq. I'm willing to go long, but I need support from the parabolic.
Get to a stop trading.
I'm not gonna do that until that point. Let me come late, but more secure.
Now, stock has come down a lot. They were using 960 price target, now using 790. But
Wow, look at that, came down 15 points in a second.
It's got a free delivery. Order now, free delivery. They are going to be the winner when the smoke clears in fast food, and I think they're going to be the winner because they remain the millennials' favorite. They're still doing everything nutritionally, but they have come up with
The parabolic gave negative sell signal on the S&P on the 1000 tick. I'd like to see the minutes to confirm it.
We're going to talk to Jim Stewart soon. If you have a long-term horizon, Chipotle, CMG, I think you can buy it in stages. Buy some here, buy some 550, buy some 450 if it gets there. That's my kind of stock for the ages.
You know, Jim, I did want to come back to what you opened the show with.
The reason this is holding up a little bit, because you can see right here on the 30 minutes, it's really at support on the blue line, which is the first support. So I'm not sure who's gonna break first. There is a possibility of the move to the upside. Don't know. The internals are negative. The trend is positive, and the put call ratio is, well, you know, the equity is bullish and the index players are bearish, which means that the equity players are betting on the market going down, and therefore it always does the opposite, and the index players betting on the market going up. And so I'm gonna go with the bearish, with the positive bullish indicator at this point, because these are the day traders. Okay, now we'll see there's a positive on the 1000 on the NQ and a positive on the S&P to buy. But the 3 minutes has not confirmed it yet. Once it's confirmed, I know the market has moved significantly, 20 points, but that's fine. Once it confirms it, I'm willing to jump in. I cannot see where it's gonna go though. It's hard to tell. I've never been so confused in terms of the signals.
At US Bank, we believe hard work works. And our integrated approach to wealth management helps make sure your money keeps working as hard as you do.
See? No trend. Goes up, comes down.
And we're here for you, especially now, doing everything possible to keep you connected. To the resilience of our network.
We basically have to sit on our hand here. We're not gambling, we're trading.
Keep sharing. Keep watching. And most of all, keep together. It's the job we've always done. It's the job we'll always do.
That seems to be a long day.
Ambition lives in our DNA.
No clear signal.
Coursing through our veins.
Something will happen. Soon, somebody will give up. Either the Bears or the Bulls. Somebody will give up. Right now, neither of them are taking position. The Bulls are not running, and the Bears don't want to sell anymore. But we're close to the lows. I'll tell you that.
Friday morning, everyone. I'm Sarah, David Faber, and Jim Cramer, all coming to you live from 3 separate locations as we continue to practice social
See?
distancing here in
It's
CNBC
not just
as a
not.
precaution.
I'll show you the 1 minute even, because the 3 minutes may not cover it. Look at the 1 minute.
Morning was down 1,083 on the Dow, we're down 900. Gains for the week, though, of about 10%. The S&P down 3.4%. Getting some breaking news on consumer sentiment, a fresh data point. Let's go to Rick Santelli for the numbers. Rick.
Yes, these are March finals, so we toss that 95.9 read, which was a mid-month, and we replace it with a much lower number, 89.1. This should not be shocking to everybody that the equity markets have gained confidence in the general public at large. Now, when was the last time we were at 89.1? I think I could give you an answer to that. The last time that we were
See, the 1 minute, which is not reliable, is still is long, but still allows for a move to the downside.
The current conditions,
So
3.7 versus mid-month read of 112, 79.7 on expectations.
I can't do anything about
That was
this.
versus 85.3.
It's just not gonna
Let's
work.
get to the meat of the bone. Now, this is
I could gamble,
inflation data, and
but I'm
this
not,
is
so I'm not gonna
actually
take it.
pretty close. And I pointed out that we saw the inflation component of personal consumption expenditure.
Especially when the 1,000 tick on the S&P is negative, and 1,000 tick on the Nasdaq is positive. That's just when these give you conflicting signals, you know there's a lack of direction. I'm sorry, that's like a boring day so far.
Some of the more recent data points, especially the March data points. Sarah, David, back to you.
Rick Santelli, Rick, thanks. Jim, how do you read the current data? I mean, it is good to finally get a look into March, and obviously we've seen sentiment drop, but personal income and spending pretty decent, and you look at some of these company numbers, Lululemon last night, I mean, they're coming off of a very strong base. The question is, how much is that going to matter to investors now, considering the world has completely changed?
Right, the Lululemon conference call, they have a lot of momentum. They, like many others, are using this opportunity to say, listen, we don't know what's going to happen. But you know something? I really do, Sarah, believe in that model. I think they're great. I think some people are already placing bets on what's going to happen on the other side, whenever we get the other side. And Lulu's going to be a winner. Brick and mortar, the Lulu brick and mortar is not that bad, but I just see I see the great unraveling of retail, with the exception of a couple of big boxes. I've been emphasizing that. I spoke to the Treasury Secretary about this. You don't want to be a slave to Amazon, but
Nothing.
I don't know. This morning, I'll give
This
you
is
a
nothing.
anecdotal.
There
I said,
is
I'm going
nothing
to the
here.
socks. Look at the socks, got holes in them because I'm doing
Sorry.
coaching. I don't know what the hell I'm doing. So I go on, I buy gold toe socks from Amazon. I used to go to Kohl's to get my socks. I got in Kohl's to get socks. The world's changed. And I mean, I think Amazon goes to 2,500 here because I think we've all been conditioned to say, you know what? There isn't a place I want to go to, so I'm going to Amazon. Another very big winner. And I think that what's happening is that the whole complexion of retail is changing radically. And I know you are very much of an athleisure person. How about Nike? We didn't get to talk about how much Nike had a quarter for the ages. It was amazing.
It did, and not only that, there was a forward
This
spin
is
on it,
so
Jim, because
confusing.
They said, and John Donahoe, the new CEO, said, we've got
Okay.
a playbook now, because Nike has the benefit
Look
of
how confusing
dealing
that
with
is.
people already in China.
The Nasdaq
playbook
tick is
focus
positive.
online, keep the
The
supply
S&P
open,
tick
and they saw
is
30%
negative.
e-commerce growth
The
in China,
Nasdaq
and
3
80%
minutes
of their stores
is
in China
negative.
back online. So
The
now
S&P
stores in Europe and
3
the
minutes
US are
is
closed. No
negative.
question Nike gets hurt if there's a global recession and pain in the developed world. But I think they're feeling pretty good. And I also think you're going to see this trend, Jim, of the stronger brands. They have weathered crises.
I'd like to see some consistency. Okay, positive, positive on the 3 minutes, positive on the Nasdaq, and oh, not positive on the tick, but that could change. So maybe now we could take a stab on the long side.
With James Quincy, they're doing well, but I think the PepsiCo Snacks doing incredible. The Guarta, who does not,
But look,
obviously is
the
not publicity,
big old boys are not
is
buying.
doing a very, very good job. We know they didn't do the 5. They didn't get the 5% growth. There is the convenience store level has been weak, but there's lots of things. They're doing decent online business. But before I go to leave the athleisure, Under Armour, Sarah, not a strong enough brand, huh?
I'll just buy one contract.
Under Armour, yeah. I mean, I think what you're seeing is that if you were in stronger shape going into
Yeah,
this
we
crisis,
bought one contract
Nike
and
was
fell out of bed right after I bought it.
from a stock market
Amazing.
perspective and
Okay,
from a business
we are
perspective.
in at 36. No big deal. One contract.
The new CEO of Under Armour is dealing with
Actually, we are in the green already.
issues. They just sort of started expanding their business in China. They don't have that.
We
deep
bought it
footprint
at
that
36 and a
Nike has had
quarter.
for decades. So yes, you're definitely seeing a distinction here in terms
It's
of
45, 43. Of course, it's getting volatile.
I like this idea of the brands. Stay at home, brands coming back. Procter's actually held up decently at the last couple days.
Here it is.
Because when you have a rip roaring 19.9% gain in the S&P.
It will turn negative at any point, though.
But the money's going to flow
But
back.
here it is.
It's going to flow back to the McCormick's. The stay-at-home
One contract only.
McCormick good brands.
Not taking too much risk in it with it.
I like it. I used it on my salad last night. I had the same salad every single night.
So you're gonna turn negative
My
soon.
wife's in the Hamptons cooking for everybody other than me, and that stuff can make it goes on anything, Sarah.
I totally agree with you. Maybe David's even sitting in his Lulu sweats and eating Frank's Red Hot. I'm eating cereal for every meal. We talked to the CEO of General Mills yesterday. Boy, they are getting a lot of life into that category, which was sort of
Okay,
left for
put
dead
another
before
one
this crisis. But as Americans stop
to average
using
down.
Campbell's soup,
Let's look at the
Smucker's,
chart.
brands that were hurting
Average cost is
General Mills
34.
to hear how they're growing
We're seeing a decline here.
Center aisle of the supermarket. I mean, it's actually made a comeback. Now, Hormel, when I had them on, was saying,
Okay,
listen,
we're
it's
positive
never
on two
been
contracts,
bad.
but barely. I tell you, this is something.
It's really terrific. I know
Give me
that
my
Spain,
10
there
points. I'll take them.
cases of this surviving
I took my
nuclear
my
bombs.
10 points,
And that is a joke.
which is
But
$40
I think
bucks.
that Hormel is another stock you wanna
Please
own.
remember. Oh, look at that son of a gun! Just shut up. It's alright. Don't feel bad. We take $40 at a time.
Well, Sarah, I should tell you that I did have my life cereal this morning, but I always have it every morning. So
Life?
that's,
I do too. I like cereal.
that hasn't changed for me.
I'll send
Yeah, I
you
like
a
life.
box of Domino sugar. It's better for you than life.
Okay. We're seeing some blue signs here.
About something
as opposed to red, which is a good thing.
One day, hopefully as soon as possible, this crisis will come to an end. But what are the behaviors that are going to change for the long term? We've talked, Jim,
The Nasdaq is at 40, 50, 48.
in terms of work and whether they will still assemble in the same with the same
Okay.
regularity in office buildings and in places like that, or whether work from home will be a more consistent
I think
feature.
now we
But
could.
also you mentioned
Oh, geez, look at the stochastic is
one has
overbought.
to believe something we've been talking about for the longest period of time as in decline is only going to accelerate with both the financial handicaps that they find themselves in as a result of this crisis.
You see, the stochastic overbought and the stochastic RSI is overbought. And notice that stochastic has a bar at the bottom, means a non-random move to the upside, which I expected to come down. I don't know when. It seems to keep going up.
Knock yourself out. So I think that's what a lot of the people who are capital, not labor, have to be shaking about. You know, the idea that suddenly people can just say, you know what, other than in New York City where they always did it, you know what, well, I'm staying in my apartment, I'll get you the money.
Everything's
when I
looking.
get to you. I think
Oh,
that could be a
this
change.
30 minutes came from undersold.
Jim,
Did
just
not
really
give
quickly
they
on
give
the
me a
local
buy
market
signal?
right
Let's
now.
see.
He's
Did not
down
give me a buy signal yet, so I'll just stay
3%.
put for a second.
Worse, given
Yes, I
we've
am.
just had a tremendous
Absolutely.
rally in the last few days, and the numbers in the U.S., in Italy, in Spain, they're horrifying.
Yeah, almost 800 deaths last night in Madrid. Yes, we should be down much more. I find it almost as if our next guest is so prescient, Jim Stewart, that people are using this decline. I had Anthony Noto on last night from SoFi. Do you know the millennials are just, they have a lot of money on the sideline. They're coming in, they're buying like mad. I mean, the buy versus the sell's incredible. Maybe people have got some horse sense. Younger people know they're not going to touch that money for the next 25 years. They're putting it to work here, and that's what I think we're seeing. And I actually think that's great. I just wish the market were a little less.
The market is not coming down, although it is overbought on the short term. So I'm gonna take a contract. I bought one contract at 52,
We need it to calm down.
and
We need it to calm down.
we'll see.
Well, maybe today's a good sign on that
You were
front.
right, Sarah.
Yeah.
How's your TV? How's
Well, let's
your
bring in-
system working? You're not cutting in and out.
I don't know. You have to send Hans
It's down
Vestberg of Verizon.
to 45.
Send him over to my place because I've had some troubles on Wi-Fi.
Yeah,
But let's bring in the aforementioned.
that's his first priority, Sarah.
He's going to drop everything.
Down to 38. Wow, that's a quick move.
He's on his way. He's on his way. You heard it.
Let's bring in. At least I fixed my shot jam since you gave me some grief about it.
I bought another one at 38, so my average cost is 45.
He's seen it all. His latest column,
Doesn't
I
look
became a
like the best
disciplined investor over
trade
40 years.
today.
The virus broke me in 40 days. Jim, that's quite a statement. How many crashes have you been through, and why is this one
We
different?
will see.
Well, I guess, starting with 1987, which, I panicked after that, and I sold everything. Jim Cramer will remember that.
Yes, I do, James B. I do.
Investing together, and then I sat on the sidelines while the thing shot up, and I realized, oh my God, what a stupid mistake that was, the proverbial selling. Whoa, and so I'll never do that again. Then I went through the tech bubble where I had the opposite problem. I didn't sell, but I didn't do anything else. I just sat there while my portfolio went down. And then finally I came up with a strategy. I talked about it on CNBC in the past, where I buy 10% declines. I put that into fact. It was tough, but I did it in the financial crisis, and it worked beautifully. We had a 10-year record bull market, which eventually all reached new highs. Everything I bought turned out to be profitable. I thought, isn't that great? So I'm ready.
It is
I'm ready.
not coming down, it's not going up.
It hit, and was I ready? No, and I was thinking about it. I just thought, look, I'm going to write about this, just be really honest, because it's so easy to have a rational plan when nothing.
Let's see what happens.
Turned upside down, and then when it does,
The tick allows for move to the upside, but there's some retracement needed.
the actual
Maybe it's happening now.
rational plan at times like that, it's so hard.
But you did,
And
and
all
that
my
piece,
rules
James.
just went out the window.
But Jim, that piece was so good.
Okay, maybe now the tick is moving to the upside, and we are almost at break-even point. It's at 46. We are round around break-even point.
We're not so young anymore, James, but you're still good Lauren Trump.
My breaking point is 45, 75.
I know you said at one point, I looked at the prices. Oh my God. Don't look at the prices. I mean, if you're thinking about buying a company like PepsiCo, you don't need to look at the prices every minute. That's why I thought the column was fabulous. And
Here it
everybody
is.
has to read that column because you lay it all out. And you're one of the few people
And you
who
could
ever
see
thinks
both
you
at the
might-
same
might
time.
make a mistake. We have people coming on air. James, it's incredible. They've never made a mistake yet. They still have time to come on air. Isn't it something?
I know. Well, I can't imagine any worse way to go through something like this. And again, let me say, obviously we all have
Came
big
down.
things on our mind.
I should-
and just
again.
how our finances are doing. But I think you can be compassionate, you can be concerned. You can
We're down about $30, not a whole lot of money.
consistent with trying to make some smart decisions about how you handle your personal finances. But I can't think of a worse way to spend this period than glued to my portfolio, clicking on, oh my God, what torture that would be. And one of the reasons I was so shocked when I did
Okay.
by the way, was the international part of it. Everybody was talking all this. Most of the headlines were U.S. market does this, U.S. market does that. But the international markets have been so much worse. I was stunned when I saw those declines.
James.
There's no momentum really. He's trying so hard. It's not going anywhere.
Who's 40 and in Madrid? My daughter's in Madrid now. How is he doing? Because Madrid is now the epicenter, worst city on earth. And I know that when Lisa saw that, she said, "Oh my, this is 40 years old. In a coma. Has he come out?"
Yeah, the selling seems to be exaggerated a little bit.
As I mentioned at the very end of the story, he came out of the coma this past weekend after being in there.
Oh, and the PTI went down below 35, which is not pleasant. Oh, that's a losing position for sure. Unless I wait for hours, maybe.
This thing brought him down so fast. I mean, he got the virus, he was diagnosed, and the next thing I knew, I hear...
Let's see what happens here.
He's in a coma. Oh my God, that's...
The big guys are buying, but that's not taking the Nasdaq with
They
it.
hooked him up to all these machines, and he hung in there, and he did come out. The doctors are saying it's going to be weeks and weeks and weeks before he's back to normal, but they're optimistic. So that's really great news.
This is the first great news I've heard.
He came so close to death.
Yeah, I mean,
near death.
we got to stop thinking that it's just this 78-year-old person in Milan. I mean, that's what I think was a kind of a.
Yeah, I know. I mean, even if it is the numbers are lower, I mean, who wants to roll that dice?
Now the 1,000 to give me a sell signal.
They say, oh, symptoms are mild, and Boris Johnson says, oh, the symptoms are mild, but you don't know if you get it if they're going to be mild. That is scary.
It is scary, Jim, and we wish him well. I was just going to say, it's so hard in a way for us to talk about this because there is such emotion, and we're talking about, the human toll and this terrible tragedy happening, and at the same time, we're trying to make sense of the markets and the economy and trying to help investors do the rational thing, Jim. It's a tricky balance to strike, and it sounds like for you, it's been difficult as well to try to figure out sort of how to do that. And to hear big names, Lee Cooperman, Paul Tudor Jones, John Rogers of Ariel, all saying this is a great buying opportunity. I mean, how do you make sense of that, given the reality that we're living in?
I don't like that. I'm gonna take my $100 loss, whatever. We'll make it up later, it's no big deal.
Life and death sort of phenomenon traveling the entire globe. So it has added a huge new emotional dimension. But what are we supposed to do? Just ignore the
it's not working.
business consequences of it and the consequences to our personal finances? I don't think we can do that. I mean, that's what I had to force myself to do. The temptation is to just go into a cave and close the door and try not to think about anything. But I don't think denial is an effective strategy. Like I said, there's nothing inconsistent with trying to be rational and smart about your own personal finances.
We let this go a little bit further than we should.
And the impact it's having on people both, near and far.
It's like $150. It's alright, we made that money, but
Service, honestly, and I think yes, you have to cover this. And again, one of the things I sometimes think about when I'm on those occasions when I do step in and buy something the stock market's plummeting. I mean, you're providing some liquidity for somebody for whatever reason. Somebody has decided to sell, they want to sell, they and they need buyers too. So it's just helping to keep the financial money flowing here, even if it's just a small part that an individual investor is doing.
James, back in when we started Smart Money with Steve Schwartz, we used to talk. Remember the hunt for the next Amgen? You and I were always talking big growth stocks. Is that the philosophy here, that you try to pick up something that could be next 30, 40 years, or are you going with staples?
Well, I just buy index funds because at times I can't own individual stocks. I'd rather that.
We're cutting down our loss a little bit here, down to almost 100 from 200, which is a good thing.
So I haven't really, drilled down on some of the.
I don't see it going anywhere.
What I would probably do is,
I pulled the trigger.
It's a little bit contrarian, and I'd be interested, for example, in looking at.
I think we need to short that market.
Transport here, I think they got really battered.
We shorted the market. We waited too long, shorted the market. But sometimes you get it, sometimes you don't. But you can see it fell out of bed right after I shorted it.
Some of it, if you're, especially if you need some income or something, if you look at the yields on some of these,
And I'm gonna increase my short if I can from a higher level.
Totally agree.
So I would be looking at some things like that.
The drug stock yields. Some of these are great. You are so good, Jim.
Oh, thank you.
Jim
Okay.
Stewart, thank you.
I shorted another one.
Wish I could see you in person.
We appreciate the time.
Great, thank you.
Look at that. Now you're going up, girl.
Soon. We'll see. We hope to see you soon. Jim Stewart of the New York Times. And Jim, as we await the Vice President, Mike Pence, coming to you in just moments, wanted to also highlight
That's what's
something
going on.
you said
They're
about
having
who's
a
betting on
conference.
who's betting on stocks. You said millennials. Also, did you see that Wall Street Journal article showing that 2,800, more than that, executives and directors have been in this market buying stocks, third highest level on both an
My average
individual
cost
dollar
is
basis since
9601
1988. And I'm
and a
wondering how
quarter.
you read that. Is that prescient? Is it just a patriotic duty?
Well, I think that at first I thought that they were kind of painting the tape with that, but you take the buy by Charlie
The market is
Short,
very
who's
indecisive.
news at Wells Fargo, but he made a buy, and I think he was down like 78 cents after he bought it, and people were,
Look,
I think,
this-
saying,
this
we just
really
did that
turned
as,
out to be a
as
bad
a statement.
day.
No, I mean it's just a huge buy, and why not wait if it's so?
We lost
dire
money on the
here, why not
downside, we
wait
lost money on the
longer?
upside.
I thought some of these buybacks, with the exception of the oils, because that's a commodity. But a lot of the buybacks seem to be, you know what, I finally got
But
my
I'm
chance
not
here.
gonna go long
I
right
love
now.
what Jim Stewart said, which
Let
is
it come
that
down.
if you can trust the yield, now maybe you don't trust Charlie Sharp's 7% yield. I want to believe. Now, I know that I didn't say I believe because it's a bank and the banks act badly, but Charlie Sharp, really smart guy, ran Visa, turned into a powerhouse, now running Wells Fargo, buys a huge amount of stock, 7% yield. I don't know. I mean, to me, there's something there. There's something there. I think that's kind of interesting.
Absolutely.
Jim, we
The other
talked
data-
about the banks.
Go ahead, David.
Yeah, go ahead, sir. No, okay.
Go ahead, Jim.
Jim, we talked about the banks, but we also talked about the earnings power. By the way, also important to note that component of the bill that allows them to treat deteriorating credit in a different way, at least in terms of acknowledging it. Some are concerned about
This is
that
the
as
most
well, but
confusing
that's
I've
another
seen
benefit to
with the
banks,
market.
that was buried in that bill. A 08 era rule that they are now suspending for some period of time. But I don't know about the earnings power of these banks. That's what I kind of wonder about, Jim, for
It's
some
unclear.
time. I mean, if we're in, yeah.
No, I mean, I have Brian Winham come from Bank of America, and when you see all of the different ways to not have to pay Bank of America back, any bank back, then you start thinking, wow, wait a second, the non-performers are going to spike. I was talking with Wilf about that. We just talked with Wilf with Vice President Pence. And so you have to believe that tangible book value is no longer as serious.
It's coming down again.
And you have to also expect that this is one of my big fears, that the property that they lent against, that maybe we've got some declining asset. Maybe it's 1929, 30, 31, where what you borrowed for goes down in value. And we certainly wouldn't want to see that. That was a replay of 2007, 2009. So you're absolutely right. Earnings power suspect, but I do respect giant buys, just like I respected the giant buy that Jamie Dimon did of J.P. Morgan in the 50s.
Right, which proved to be.
I was looking at the fund
Sarah,
flow
we don't
data.
talk. Yeah, go ahead.
No, David, I wanted to ask you about the fund flow. Did you see the fund flow data? Record amount of money inflows into cash, 234.6 billion. Obviously, not a surprise. But what was interesting was the bond data. There's some outflows from bonds, a record amount, 109 billion. And for the first time in 9 weeks, people actually took money out of government bonds. And obviously, there were some concerns around liquidity and pricing. And I'm just curious what you're hearing about that dynamic of what's happening in the bond market, whether this great bond bubble might be bursting, just the fact that it hasn't been such a safe place over the last week and a half.
It hasn't. Now, I would draw a distinction between sort of treasuries and bond funds that are basically treasury funds and short-term bond funds that are investing or trying to get some sort of yield and are investing in high yield or investing in mortgage-backed securities and investing in things like that. A, we saw a lack of liquidity, Sarah, and B, we saw serious dislocations that impacted the overall net asset value of those funds in a way I think that holders would not have expected.
This is the most non-deterministic charts I've ever seen, and I'm serious.
Not to mention municipal.
It's so confusing.
Whacked badly as a result of liquidity and people simply pulling money out. So that's a bit scary, I think, for some who said, "Let's get out." Yeah, let's just get out because these things
doesn't want to go down, doesn't want to go up.
Which is different than just a treasury-backed bond.
I'll put a stop at $100 or so, and we'll let it play.
But what do you guys think?
No question. There's liquidity issues.
But Sarah, I mean, again, coming back to what's happening at SoFi, these millennials are saying, this is my chance. And, you know, people who have a long-term view, hey, maybe the millennials are as stupid as a bag of hammers, but, you know, when I see the inflows there, which are so, I think, isn't that what's supposed to happen? You've got this once-in-a-lifetime thing. You know, no one ever talks about this. Let me posit this. What happens if we actually find an antiviral that gets people out of the hospital? Do you imagine where this market is with this liquidity? Is anyone even thinking anymore that there's something going on at any drug company that actually may have an antiviral? I mean, holy cow, you have the short squeeze of a lifetime, but the millennials will have gotten in and they're going to look back and be rich for the rest of their lives if we get an antiviral. We get something, we get a therapy, an acute therapy. Don't laugh, David.
I totally agree.
I mean,
no, I'm not.
No, I mean, the CEO of Northwell
laughing.
Health told us yesterday there are clinical trials.
Many clinical trials. Remember, you had to stay inside for polio, and then one day you went outside because they cured polio. Now, I know this is harder, and I know that ventilators, and it's not just a regular cold, but I have just been marveling that people think that our drug companies don't have good scientists, and that everybody who was smart went into social media for a generation. They have smart people, and you're betting against science if you're betting long-term short here. You really are. You're betting against science. Sucker bet. You ever have measles? Any of you guys ever have measles? You guys ever have measles?
No, I had the
vaccine. I
think I was one of the early.
Well, here's what happened when you had measles. You went into your class. You went into your class. You're second grade.
No,
you're
I'm
first
dumb
grade,
as a hammer
and everybody
millennial.
had it. You got measles. One guy had measles. You all had measles, and the people don't even know what measles is anymore. People died from measles.
Jim, your point on the antivirals is a very good one, and perhaps one that we should be focused on.
Just a nothing day.
The vaccine, as far away as it may be,
I'm probably going to step back and just let it go.
As soon as possible. But the antivirals and the efforts by Regeneron,
it's not moving. 3 points up, 3 points down.
Something that is going to be efficacious in terms of
27 to 30.
The effects of the virus is, and the sooner the better. And it's certainly something we have to keep a close eye on.
Definitely. So it's my hope.
Now it came down a little bit further, 24.
Not to mention the immunity test that Jim, I know you and I have been watching, the fingerprint test.
Had a good one just announced.
Yeah,
or the Amazon idea, if they can get
we are almost at break even.
There are people doing
We
things.
are.
It's not just
Jesus Christ.
We're not just a bunch of pitiful, helpless giants.
Well, meantime, guys, the U.S. Navy is sending
We are in the
ship to
green.
Los Angeles. That is good news.
And
in
it
an
came
effort
down
to
finally.
relieve pressure here on
Barely.
hospitals and try to alleviate some of their concerns. Our Jane Wells is at the port with more. Jane.
This is so crazy though. There's no
Hi, Sarah.
direction.
Yeah, this is an exclusive
I can't take
first
credit
shot,
for
that we're getting here. US
game.
Navy Hospital
If
ship
any,
Mercy.
it will disappear in a
It should be
second.
in the port in about an hour. Now the
It just
Mercy
did?
is
Oh.
here at the request of Governor Newsom to help relieve the strain on hospital beds, which
It
is
did
starting
disappear.
to get pretty bad
It's
as
a loss
more
now.
people are testing positive for COVID-19. The ship has 1,000 beds, which will be used for non-COVID-19 patients. The port says regional hospitals will begin moving patients to the ship to free up space. The LA County Department of Health tells me there are 23,000 hospital beds in this county. This is the largest county in America.
Look,
over 10 million
went
people.
back.
But here's the number. There are only 2,200 ICU beds, and of those 2,200, only 10%, 220 ICU beds are currently free. Over 1,200 people in the county have tested positive. Here's a disturbing number. Yesterday, the head of the county health department said, if people do not stay away from each other and continue to shelter in place, in a few weeks we could have 1 million cases here, which could mean there would be a need for 200,000 hospital beds. Of course, we're going into our second week of the stay-at-home order in California. The port, by the way, still fully functional. All 27 terminals are working. Nobody here has reported sick.
Okay,
They're,
it's coming down.
working at about 80% of normal. But again, this hospital ship with 1,000 beds will be for non-COVID-19 patients that will be brought here, and the Navy wants it, and the port police want people to understand. You cannot come to this ship if you are sick. You have to go to the hospital first. Guys?
Look at this. I mean, it's not giving me the time
Jay
of the
Wells,
day.
thank you very much for that update. And speaking of the federal government, let's get to Wilfred Frost right now. Now joining us with a very special guest, Vice President Mike Pence.
I just
Wilfred, over
took
to you.
$10 or $5 profit and just got tired of it. I didn't want to be there. That's enough until they decide. It's very confusing. Well, it's better than $100 loss. We made a couple bucks. But this has been not a smart trade. We just got lucky. The market is so confused and actually confused me as well. So I'm just gonna I'm not gonna trade now. Let it do whatever it wants to do. Something has to give. I'm not gonna go in. I need some decisive position.
Well, as the president said publicly, Wilf, he had a lengthy and positive call with President Xi last night, and as was the focus about this time yesterday with G20 leaders, President Trump is completely focused on confronting the coronavirus here in the United States. But we're working with China. We're learning the lessons. I know they spoke at great length about China's experience with the coronavirus, and we're applying those lessons here. We're listening to our uh, 15 days to slow the spread. And these measures, in addition to the strong measures that governors have been taking with our full support in places like Washington State,
I'm gonna
California,
end this
and of course in
stream
New York,
because the
and
market is
Louisiana,
extremely
and elsewhere. We're gonna
indecisive.
continue to lean into this.
I
We're
cannot
gonna
make
continue
sense
to-
of anything at this point. When I see a change in character of the market where we could make intelligent decisions, I will go back and stream. At this point, this is not a market you could trade. So I'm gonna have to call it turn off for the time being. And as happened last time when I gave up, the market had a direction, but we'll just call it turn off at this point, and we'll take it later.
Goal, Wilf, that as we continue to follow the data, as we continue to call on every American, regardless of whether they're in an area where this is